Ever wondered how to hold on to a winning trade for a bigger gain? Well, you're in luck. In this video, we're diving into the details of a recent trade in Nvidia from our swing trading letter, the Wagner Daily, that's still open and showing an impressive 40% gain. We're going to arm you with the strategies and tactics you need to avoid selling a winner too soon and seize those big gains. Get ready to break free from missed opportunities and take your trading game to new heights. Let's dive in and unlock the potential for big wins together. I'm Rick Petticelli from Morpheus Trading Group, and with over 2 decades of experience in trading, I'm here to help you hold on to those winning trades for a bigger gain. If you're eager to learn more about making informed trades, hit that like button, subscribe to our channel, and let's jump right in. As we mentioned, we're going to run through a recent trade in Nvidia in our daily newsletter, the Wagner Daily. We're going to cover the reasons why Nvidia was on our watch list, why we bought, and we'll go through trade management. So first up is, why was Nvidia on our watch list? There's thousands of stocks to select from. Why Nvidia? Well, first off, we're looking for a stock that's explosive. We want to, narrow our watch list down to stocks that have the potential to rip, 30, 40, 50% higher over a few weeks. Now, how do we know Nvidia will do that? We don't, but what we do is look for what it's done in the past. And if we've seen the potential to rip higher in the past, or we've seen it rip higher in the past, we know that it has the potential to do so in the future. So that's what we did with Nvidia and what we do with a bunch of stocks. We saw that there was this explosive rally from the last cup in late 2022, early 23, that led to an explosive 160% move over several months. And what's really impressive about Nvidia is following that explosive move, it only gave back 22% of that advance. So we have a great move out, an explosive move, and then a very tight consolidation following the move. That's just a great sign. That's what we want to see. That's what a quality leader should do when it's in the middle of a strong run. And so from there, Nvidia makes our watch list because of the price action attempting to break out and failing here in late November. Now, this failure actually ended up being a good sign. And though really Nvidia could have ripped from here and not looked back, but it didn't. And as I mentioned earlier, this was a 22% pullback. And with the price undercutting, oscillating back and forth above and below the 10-week moving average, the red line, which is like a 50-day moving average on the daily chart. So when the price action failed to follow through on the recent breakout attempt, it pulled back to the 10-week and held, which is a bit of a change of character as the last few times it sliced through the moving average. And so also this pullback was around 11%. It bounced off the 10-week again, stalled at the prior high again, and pulled back, but this time only 6%. Once again, holding on to the 10-week moving average. So now we have the price action tightening up, going from 22, 11 to 6%. We also have the 10-week moving average going from an uptrend to sideways for a few months, now back to trending up. And then we have the breakout here. But let's go to the daily chart to see the breakout and go over the reasons why we entered where we did. And so on the daily chart here, we have the price action leading up to the breakout. Why did we buy Nvidia when we bought it? Now, as we mentioned earlier, Nvidia could have broken out on November 20th. It didn't. It failed. It pulled back in, tightened up, and it finally broke out on January 8th. Now, Nvidia was on our watch list, and it was certainly something we were closely monitoring, but we had yet to enter as of the morning on January 8th. And we weren't looking to enter, truthfully, that morning, but we did see the price action rip through the highs of the base and noted that the price action was pretty strong and the volume was impressive. It was well above average on our trading platform, and the way the move and the way the stock was breaking out, we knew it was go time. So right there and then, we knew that we had to buy Nvidia. It wasn't a perfect buy either. It was a little bit above the 505 or 504 entry. It was around 510, but it really doesn't matter where we get in on that day, as long as it's close enough to the buy pivot, as this is very explosive price action, and that's the only sign that we need. It's go time. So we're not going, the reason for the entry wasn't some sort of inside day or downtrend line break. We simply saw the price and volume action being explosive early in the morning, and we knew it was go time. After several months of trading sideways, Nvidia was finally ready to explode out. So again, we bought in around 5:10 in the newsletter. And whenever we're buying a stock in a bull market, with our strategy, we're looking for at least a 20% return. Usually stops are anywhere in the 4 to 8% area. So we're looking to at least make a 3 to 5 times that amount. We want to at least catch a 20% winner in a bull market. We think we can do that. Shouldn't be that tough. What we get beyond 20%, if we get, if we go to the 40s and beyond, that's where, those kind of trades can really make the year. And I think everyone pretty much knows, if you've been trading a while now, that it's maybe just 20% of those wins that really boost the P&L. So we're in Nvidia from 510. We love the price and volume action on the breakout day. Volume was about 60% higher than average. Anything greater than 30-40% is ideal. And then the next day, price pushes higher. And then, as we see here, there's just no violation of a prior day's low, really. And the price just continues to push higher. There's really nothing to do here. We're just in sit on our hands mode, and we're just watching the price action go up, holding above the 8 EMA. It's not even touching the 8-day EMA. So the number one thing to do in order to hold on for a bigger gain is to do nothing. There's nothing to do. And that's pretty easy, actually, when the stock is cooperating in a strong market. I think some of the best trades are usually the ones that are just easy to sit in because they don't really challenge you. They may do so once you're up 40, 50, 60%. And if you want to hold on for a bigger gain of 100, then you might have to sit through some ugly action in the 70, 80% range. But a lot of times when we get winners well over 20%, it was just easy. And so with NVIDIA, we're holding above the 8. We have a pullback here, still holding above the 8. No reason to do anything. Now, depending on what type of trader you are, that will dictate how you want to sell NVIDIA into strength. Selling maybe a partial size at a 20% gain is a good idea. I'm not saying to sell all, but maybe, 10 to 20%, and let the 8-day EMA guide you for the rest of the position on when to exit. So by doing that, we take our emotions out and let the trade just play out. And that's what happened as the price action continues to hold the 8-day EMA. Now, we did sell partial size for a 20% gain, and once again, partial size here for a 33% gain as the price undercut the low of the gap up day, the second gap up day. And still, at this point, we're still long 2/3 of the position. And after this reversal candle here, the price took out that day's low. We sold a little bit more. So we're still holding on to a half position here and continue to do so, as there's no reason to sell as the price action is above the 9-day or the 8-day EMA and hasn't closed below that level. So, whether or not you want to hold the position until there's a break of the 8-day EMA or sell partial on the way up, that's fine. The idea here is to hold a decent amount until there's a break of the 8-day EMA on a closing basis. So now, with NVIDIA reporting earnings this week, we're most likely going to lock in our gain in the newsletter. And if we hold on to anything, it's going to be a very small, maybe 1/5 of the position through earnings. But whether or not you want to hold for the bigger gain is up to each individual trader. But if you're a shorter term swing trader and your goal is to maximize profits and minimize risk, and you've let this type of stock run into earnings, and there's been a decent run of 40% or more, it may be best to take the full position off the table, because whenever you hold through the report, you do open yourself up to a gap down. There is gap down risk. And NVIDIA could react to earnings with a 10 to 15% drop. So just selling it to strength gives you that peace of mind when you're a swing trader, and it's just something you can control. And if you're a little bit more of the intermediate term trader, maybe you, as we mentioned earlier, you could sell maybe half the position, hold on to the rest. And if you're a longer term position trader, maybe you want to hedge some of that risk with some options, or maybe just sell 1/3 of the position and hold on to the rest through the report. Again, that's really up to each individual trader and how they want to and their own trading plan. So as we mentioned earlier, we are still long NVIDIA with an unrealized gain of about 42% or so. We sold some shares at 20%, 33%, and 44%. And we still have a half position that we're likely going to exit prior to earnings. And just the reason why we were able to hold is that we just followed one of our most simple techniques, which is to do nothing until there's a break of the 8-day EMA. Just sit on your hands. Try to fight the urge to sell. Nothing bad is happening when a stock is holding above the 8. Some people might even use the 5-day EMA or SMA if the price goes really parabolic. That works as well. You got to pick a moving average and use that, and that'll help you eliminate the emotion in the trade. All right, so just a quick recap. The reasons why we bought Nvidia: explosive price action on a rally earlier in 2023, big move up, gave back very little of the last advance. On our radar just because it's an awesome stock. Market leader. It's on a watch list that we're monitoring every day, but it wasn't something we're looking to buy on the morning of January 8th. But when it moved out on big price, on strong price and big volume, it was a must buy at that point. And then we held on to the trade for as long as we have, just following a simple rule that don't sell anything before there's a close below the 8-day EMA. And that's it. And then we just followed our plan. So that's a wrap for this video. Thanks for watching. If you found these insights helpful, please show your support by hitting that like button and subscribing to our channel. For more in-depth analysis and to get our top swing trade setups with the exact entry and exit points, visit morpheustrading.com and click on Stock Picks. Join the MTG tribe today and be part of a community dedicated to successful trading. Thanks for joining us, and remember to trade what you see, not what you think.